The biggest challenges for us, because we're a private equity firm or private capital firm, and we don't have a lot of available capital to invest. So we need to get a spread between the interest rate and the cap rate. So for a group like ours, it's hard to find value in good locations in the Canadian landscape because the supply-demand imbalance in terms of little supply and lots of demand, that's going to exist for a while. Raising equity is big for us, and the second is it's a competitive playing field out there, and we're not always the one that's chosen to win the day, and that's hard for us.
I'd say our most significant challenges, there's probably three in our local Greater Vancouver portfolio. One is managing construction costs and procurement. We have a very, very large development pipeline in this market, in particular with the Oak Ridge project that's well in excess of $1 billion project value. The post office, approximately $800 million project value, where we're definitely facing pressures on the cost front and are working very diligently with our contractors to manage the procurement side of those projects. The second challenge for us, I think, is really leasing in the post office project in particular. We have 700,000 feet of office space that's uncommitted in that 1.1 million square foot office project. So that's definitely something that keeps us awake at night. I would say we're cautiously optimistic, but it's a big bet on the downtown Vancouver market. So that's definitely a key priority and a key challenge for QuadReal in the Vancouver market. And I think lastly, we do have, as of say the last, from going back 2 years, 18 months ago, we now have some exposure to the condominium market in Vancouver, primarily as a conduit to obtaining long-term core assets in the rental residential sphere, or in the case of Oak Ridge, core super-regional, regional mall asset that we're ultimately going to have in a very prime location in Vancouver. So we're monitoring the condo market very closely and making sure that we calibrate the product that our joint venture partners and ourselves are offering to the market conditions that are prevailing or expected to prevail when we complete the projects.
I think there's two. I'm going to say from a macro and more, I would say, a micro perspective. Macro is all the head fakes the economy gives us. And what I mean by that is it's back to this volatility. People are uncertain whether I have too much growth and interest rates are going to go up, not enough growth, interest rates are going to go down. We've got geopolitical risk. We've got a number of factors, China-US trade. So there is a lot of factors that I believe today affect the Canadian investment real estate market way more than they did 10, 20 years ago. So that's a challenge to understand the trends. And I think we all have to be careful that one of these days we're going to have a scare and it could become a real scare. So we're just being able to prepare your portfolio for that is going to be important. The other challenge I always think in this business is people. And this is a management-intensive business, and you need good people both to understand what's going on the macro, but really to take care of your properties, understand how you can best perform in this asset class. Competition is high. So collectively trying to find those people to help us take us through the next generation is going to be a very important task, and that's something we're very focused on.
The biggest challenge in metropolitan Vancouver for real estate in 2019 starts with the individual person living in the community. By and large, there's anger and there's fear. There's anger about congestion and affordability on the residential side, and there's fear about what does all this mean and where's it going and will I ever own a home and what do I do? Like typical Canadians, I don't know why we do this, we go, I know, we'll go to the government, we'll seek more regulation and control over all these people doing stuff to make sure they don't screw it up even worse than it already is now. So I think that between the policies from the provincial government, the new levels of taxation they introduced in 2018 and the tail whip into 2019, the stress test from the federal government and all that, it's created this confusion in the market. And I think our biggest challenge is to navigate that confusion. from an ownership point of view, but also from an approval point of view at the political level. A lot of new politicians who've been elected to sort of fix the issue, and they don't really know because they're new, they're rookies, and they're trying to figure that out, and they're working with a kind of a confused electorate, and that creates uncertainty on the approval process, which makes it difficult to get our developments to happen. I am hopeful, however, that we'll fix this in the not too distant future, because intelligent conversations are already happening at some of the municipalities, not all of them. Some are hard, screwed up, and they will be for the entire of the next electoral term, all of 2019 for sure. But there are lots that are doing the right thing. So I'm hopeful that by the end of 2019, we'll be making some good progress in the approval process in some meaningful municipalities.